This will be a recorded session of the new teaching I did the last time. And I wanted to really pay attention to this because this is more like the epic of the whole class. So I said a lot of things in the last class, and one of the things I said that when it comes to Deriv, Deriv is a different market, and it's not treated like how currency pair is being traded. It's not treated like how the traditional forex market is being traded because this is a unique market on its own. So in our subsequent classes, I've talked about the break of structures and price coming to OBs, which is still very much valid. And if you could also remember vividly, I also talked about price reacting to opposite candles. Now, for price to react to opposite candles, I really did not know why that really happens until I discovered this, will I call it a strategy or I'll just call it an entry model. So, like I said, that the two things that are very, very key or the most important factors in this is one, you must know your candle formation, and two, you must know your timing. Two factors, the candle formation and the time. Now, these are the two conditions we use in these entries. The two conditions we use in these entries is number one, the candle formation, then number two is the time. Because there are some trades that you don't take when the candles haven't closed. There are trades, so you have to wait. So it now depends on the time frame you are using. If it is the daily, if it is the 4 hours, if it is the 1 hour. There are some trades you don't take until you have your confirmation, and that confirmation must be done after the closure of a candle. Now, let's take for example, I'll use the weekly time frame to buttress my point. And one thing that I've always said is that we don't trade from the weekly time frame, right? We don't trade from the weekly time frame because of the risk. We don't trade from the weekly time frame. Now, like I said, that we pay attention more to candles, and I said also that the structures that we've been doing and I've been teaching is not invalidated. It's still very much valid, right? So let's say, for example, and this entry model will help you to detect when there is about to be a change of character, or when there is a pullback, or when there is a break of structure for a continuous trend, either buying or selling. All right. Now, I wouldn't want to go as far back as 2, 3, 4 years. Let's let's just use okay, from this point. Now we can see that price declined all the way down. And before, if you are to wait for price to break structure before you know that the market won't start buying or the market won't start selling, you see that will take a lot of time because the weekly time frame is a lot of pips. And if you are to use the weekly time frame as your the weekly structure, not just the time frame, the weekly structure as your basis to have a confirmation for a trend, you see, you are going to wait a whole lot of time before taking or knowing the trend of the market. Now, let's say, for example, we have markets declining, selling all all the while. And you know that whenever there is a sell, there would always be either a pullback, or whenever there's a trend, there will always be a pullback. Now, how do you know that there will be a pullback, or how do you know that this pullback is about starting? Because it's another thing to know that there will be a pullback, and it's another thing to know when a pullback is about starting, right, or has started. Now, this is what this entry model helps you to do. And this is not an ICT concept. This is not a smart money concept. This is just my personal experience and personal discovery of studying the market and backtesting it. Right now, we have where can I use? Where can I use? Where can I use? Okay, let's use this. Let's use this. So we see market was selling, had a pullback, sold again, then had this buys all the way up, right? Now you see, before markets could even break this high to signify to us that there is a potential change of character, before markets breaks this high to signify to us that there is a change of character, you can actually um be on this trade at this from this point, because market structure tells you that whenever price breaks a high or a low, then you wait for price to pull back to your OB, which is our point of interest, before taking your trade. But in this case, you don't need to wait all that long. So even if you are on the daily or on the 4 hours, waiting for price to break structure and waiting for price to pull back is a lot of time, right? And another major thing is most times price might not even come to your OBs. Price might not come to your POIs. And in that case, you might have waited for a lot of time and market just moves from where it wants to move from. But with a careful study, I've discovered that all those things you can actually be milking the market the moment you notice the change of character from the candles. Because the candles will first signify to you that there's already a change of character even before the structure. So both change of character, both break of structure, both for a pullback, right? So now let's use from this was the last point I used for the last illustration, but let's use from here now. Let's use from here at this point. Let's use from here at this point. And at this point, we could see that we had price declining. The red candle shows that price was on a bearish trend, was selling, right? And for you to know that this sell is done, there must be an engulfing candle, not just a green candle. There must be an engulfing candle, or you have 2 or 3 candles buying above the previous or the last sell candle. Either you have an engulfing candle or you have 2 or 3 candles above the previous sell candle. That is for a buy setup. So let's say, for example, we have something like this. And we had this candle engulfing this candle. Now, like I said, that I'm just in the weekly to buttress this point, so we don't trade from the weekly. But it's just to tell you where market is likely to go in the long run. Let's say for a month, let's say for a week, let's say for 2 weeks, because like I've always said, your weekly time frame is where you should start your analysis first. Because when you're doing your analysis from the weekly time frame, it tells you where the market wants to head in the long run. So you can even be on one particular pair and we are actually milking that pair like back to back. That is one of the advantage of doing your analysis from the weekly time frame. You get to know where the market is going in the long run. You see the swing, the long term journey of that trade, right? So now let's assume we are making use of this as a point of reference, and you could see that this was last candle before this. Then we had a green candle that signified to us that this sell is likely done. So if we had this green candle closing exactly at where this red candle closed, now you should also know when a candle closed within a candle and how the candle also closed is also very, very important. It's a key factor you need to put into consideration. Now you could see that this candle is at least closed above this candle, even if it is not really as engulfing as I want it to be, but it's closed exactly above this candle, telling you that the sellers are no longer in power, the buyers are now in power, right? So this is the first signal telling you that there's a potential change of character in this market. Because one thing that I said is that we don't need to wait for price to now break the whole structure before we know that, oh, there is now a change of character. Each of these candles, majorly from the higher time frame, the weekly, the daily, and the 4 hours, are structures on their own. They are structures on their own. But the moment you are seeing an engulfing candle, and a engulfing candle is telling you that, oh, this the previous buyers or the sellers or the previous trend, they are no longer in control. We now want to take over in control. And mind you, there are some cases whereby you have a fake change of character. There are some cases whereby you have market pretending to be having a pullback, and and you hit SL. So that is practically normal. Losses are inevitable. Understand? It's part of the game. But when you have a good win rate, that is when you become more profitable. Now, this already has signified to us that, oh, there is already a change of character on this pair. And what do you see? Let me mark it out. So you can see that the green was slightly above it, which is still very much valid, was slightly above it, which is still very much valid. So this is our reference point. Now, if, for example, if there's a case whereby price could not break this candle, but still ended in a green candle, and the next candle was now a red candle, this candle becomes invalidated. It is no longer a reference point. It is the next red candle that becomes our reference point or our point of interest, right? So now you can see that this next candle, it has to tap into this candle before the buy begins, right? So let's say, for example, I have, let me delete this. So let's say, for example, I have something like this. After I've seen my book of structure, I'm seeing something like this. Now, remember, I've always said we don't take trades from the weekly. It's something I've said over and over again. So we see something like this. The moment the candle breaks out, or we see the engulfing candle, the next candle, we expect the next candle to come and tap into this red candle that was broken out. So just like our other block, either price taps into it and starts buying to tell you that, oh, I'm done, I've retested. So the tapping means that it's retesting that candle to tell you that I'm done with this candle and I'm about moving up. So price is going to retest that candle, and if it does not retest that candle, even after it might have bought or sold for a long time, it will still likely come and retest that candle to still let you know that it's respecting the fact that I'm done with this candle and I want to start buying. That is what it simply means, or I want to start selling. That's what it simply means. The retest is where we start looking out for our entries, right? So this candle, you can see that it retested this candle so deep, and that's why I say we don't take our trades from the weekly, right? So deep before the buy started. Then we had another retracement back to mitigate this candle. Now you see this candle has been taken out. So if we are doing our market structure, we would say, okay, this is still this is still a bullish market, because this was where the market opened from and broke the structure and pulled back into it. So before I make reference to this candle, if we should still make reference to this candle, you see it's still the same thing. This candle slightly engulfed this candle. This candle has to tap into this candle before the buy begins, and still came back to retest this candle again. So it is the candle that is being broken out that is your risk. The candle that is being broken out is your risk. if you have to take any trade, let's say per adventure you want to take a trade using the weekly, which is not advisable, your SL must be below this red candle, below the red candle. That is your SL is, and your TP can be even can be 3 to 4 or 5 candles, as long as your eyes can see, right? Now let's move to this candle, because this now becomes the last candle before this. Now you could see that we have this green candle, but this green candle did not engulf this candle. Now look at this candle, you will see that this candle has a wick, a very long wick, but this is the body of the candle itself. Now, there are cases whereby you can ignore the wick. There are cases whereby you cannot ignore the wick. We'll still come to that. Now, you could see that we have this green candle. This green candle does not simply mean that markets want to start buying. Although we can see that there was a retest to this candle again. After this candle still tap into this candle, still retest to this candle again, and price continue buying. So if for example, I want to take a trade again from this point, if it is not from here, maybe I've missed the trade. I cannot just drop into this trade at any point, because I need to be sure that if price should take out this candle, that's when I will start looking out for, then the buy still continues, right? The buy still continues. So the weekly time frame is just for us to just have a overall view of where market is heading to, either for the week or for the month, and that is why I really do not want to use entries at this point, because entries is majorly for the 4 hours and for the daily. So I was just saying that whenever you see price engulfing the opposite candle, not just any opposite candle, engulfing the opposite candle, tell you that there is a potential change of character in that market. There's already a potential change of character. So same thing happened there. You see this was the candle that actually engulfed this candle. So this was the candle that actually engulfed this candle. So if I'm to look for, let's say, I'm to look for a setup, I would need price to still come back within this zone. Now you could see that in some cases whereby you have a long wick, price will not respect the wick. Price will then just tap into the wick. In some cases, we then just tap into the wick and start buying. It will come and retest the body. But you see, even in this case, price still respected the wick here. So because the wick is also part of the candle, but the wick is showing you a sign of rejection. That just simply means it's a sign of rejection. Now you could see that after price engulfed this candle, for this candle to still buy, it still needed to tap into this candle. Still needed to tap into this candle before the buy still continue. Then price still pulled back again into the body of this candle. This is our point of interest, right? Before price kept on buying again. So at this point, you could see that price is always respecting the candle that it's broke out from. It will always expect it to come and say, "Oh, I'm done with this candle. I broke out from this candle. I came to retest this candle. Then I can now start buying." So that is the principle and the law of the candle breakout and retest, right? Now let's move to another candle. Let's move to this candle. So we have something like this as well. So let's say, for example, you did not meet this part, you now made this part. What this simply means is that, price has engulfed this candle, and means that there is likely going to be a long-term buy in this market. This is what it simply means. And you could see that when price engulfed this candle, it was just all buys. So it is not just about let's say you see red, then you now see green and you just conclude that, this market will start buying. No, it doesn't work like that. Just like in this case. So the reason why I use this scenario is because when you look at this candle, this was the last candle, and this candles try to buy, right? The buyers there try to take charge of the market, but you could see how where this candle closed and how it's closed. You see, it never engulfed this candle. It never engulfed this candle. Now you could see that this candle, this is the high, and this is the low, even if this is where the body is, right? And you see where this green candle closed, it still closed exactly within the body of this candle. So it was not engulfed. And you could see that this next candle still sold, right? So that's why I said the way the candle closes in respect to the other candle or the opposite candle is what we look out for. Not just that when you see a red candle and you see a green candle, it means that you start buying. No, there is a condition attached to it, right? There's a condition attached to it. So, and that is what you have to look out for. That is what you have to look out for, because there's a condition attached to it. It is not just you saying a you see some series of red candle, then you just see a green candle and say, oh, the market won't start buying. No, it is not like that. That is just a prediction. That you are just doing a prediction. But when it meets the criteria of you seeing an engulfing candle, or you see some series of candle breaking out from that opposite candle, then you still have to wait for price to retest that candle before you can start looking out for your entries into that trade. Before you start looking for your entries into that trade. So let's move to this. I'll use this to now explain. So I said, all right, so I was saying, if you have another candle trying to engulf the previous buy or the previous sell and it could not, then you now have, in this case now, we are looking out for a buy. We are looking out for a buy, right? So now we have this last bearish candle, and the buyers try to take charge of the market, but you see how this candle closed. Now let me adjust this. This is the high, this is the high, and this is the low of this candle. This is the high and this is the low of this candle. So now looking at this, we could see that the green did not break above this candle. It did not break above this candle. Irrespective of we have a wick here. Irrespective of we have the wick here. The principle says that there must be an engulfing of the candle. Price must the candle must literally engulf this candle. Like where you see an engulfing, you could literally know it's an engulfing candle because you don't have to doubt it. Something like this. This is a very clean engulfing candle. You see how this green engulfs this red candle. This is practically an engulfing candle, right? So you could see that this green could not engulf this candle, and you cannot start looking out for your buys. But we have another sell candle that was printed out. So at this point, you already know that if this green could not engulf this candle, you are not looking out for any entry. You are not looking out for any setup because there is no setup yet, right? Then we have a bearish candle. Now we now have a green candle that engulfs this candle. Now you could see that I am no longer referring to this candle, but I'm not referring to this candle because this is now most recent bearish candle, right? Then we have green candle engulfing it. So I have to move this to this, the high of this candle, then move this to the low of this candle. So you could see that before price engulfed this candle, it was selling. So that I said you need to really understand your candle formation and what it simply means. You understand? Because the candles alone speaks, and you should be able to interpret what the candle is saying. Now you see that this candle was trying to sell, and all of a sudden, it became a bullish candle that engulfed this candle, right? And what do you see next? Before this candle could start buying, it had to come and tap into this candle or we test this candle before we had a buy, even if the buy was not really a very lengthy buy, but at least you know that the previous week it is likely for price to buy the previous week, right? So this is one of the advantage of using the candlestick breakout and retest strategy. Yeah, I think this is what I'm going to name this strategy, the candlestick breakout and retest strategy, right? So you could see now we now had a retest, a proper retest to the candle, and this retest got to the body of the candle before we now had the major buys. Before we now had the major buys. So you could see that price would always respect the breakout of a previous candle or previous opposite candle, not just the previous candle, the previous opposite candle. Another case is this as well. We can see that this candle engulfed this candle. So let's say per adventure, you missed all this that happened, then you now see this happening again. It should tell you that this market is likely to continue the buy that has begun, right? This is now a break of structure. This is now a break of structure because this is the retest. The price still broke out from this candle. At this point, you will not just start looking out for entries because we expect that price is still going to pull back. And it is not in every instance that price pull back. Sometimes price might not pull back. You don't get entries. Why sometimes price might pull back immediately to retest immediately, might retest immediately. Why some other times price might later on come. And there are some cases whereby price might not retest that particular candle that caused the break of structure, or the or price might not retest the candle that caused the change of character in some cases, but in most cases, price always want to retest that candle that caused the change of character, because change of character simply means that I'm done buying or I'm done selling. I want to start buying, or I'm done buying and start selling. So price would have to retest to tell you that I'm done with this candle. I'm done with this trend, right? I want to start. So majorly for the change of character, it is very likely that price would, in most cases, retest it. But in a break of structure, it is not likely that price will retest. In some cases, it retest. In some cases, it does not retest immediately. It might still come later on to retest and still expect it. Like something we have on the V75 1S. I'm trying as much not to move out from this pair, but I would just use this to explain something. So you could see that when we had an engulfing of this previous sell candle, you could see there was no retest done, and price bought all the way and still came back, did not still retest, understand, and still bought and still came back, did not still retest, and it was not at this point that price now came and retested this candle. And this breakout happened in 2022, around 2022. That is about the last 3 years. And you see when price was retesting, that is June, 1st of June 2025. So you could see that price still expect that this candle has not been retested. So even if it is coming back in 4 months, and it's not every time that price would react like this. Sometimes it can just mitigate it and keeps on selling. But in most cases, it will still retest that candle to tell you that there was a time that I broke out from this candle and I need to come and retest this candle, right? So there are cases whereby you could see in this break of structure, price did not retest, still kept on buying, and in this case, you are not seeing entries. You are not seeing price retesting because entries is not on the weekly. Entries is not on the weekly. What you just do on the weekly is for you to have that confirmation that price has retested the candle that was broken out, and then you can now start looking for entries in either your daily or your 4 hours time frame to also align to the trend of what the weekly is saying. So the essence of you using the weekly is just to let you know where the market wants to head to in the long term, yeah, in the long run, so that you can now go to your daily to also have the confirmation that yes, that this market sincerely or actually want to buy. Understand? Because your daily and 4 hours must also conform with the same pattern, telling that, oh, I want to, buy in this trend, right? So that is one of the major aspects of using your weekly to get your weekly buyers or your long-term buyers. So back to the return oneness index. Now you could see that after price engulfed this candle, we did not have a retest immediately. We don't have a retest immediately. We still had another we had this candle again, this bearish candle, and this was also engulfed, right? And like I said, that in most cases, price might not retest this, price might retest the body, because the body is more like more like the main thing that can be touched in the candle. Just like we humans, we have a body and a spirit. You can actually touch the body, but you cannot touch the spirit. So this is something like that too on the candle. The wick is almost like, intangible, while the body is more like a tangible object. Understand? I'm just using this um gesture to explain this. So most times, in some cases, to price still respects the wick. So let's say, for example, we have a very large body and a small wick. In that case, price can just retest the wick. And it doesn't mean that if you have a full body candle, it doesn't simply mean that price is still going to just come and retest the body of that candle at the tip and move. No. So even if it's still a full body of a candle, price can still come halfway to retest, just like what I've also explained on the OB strategy, right? Now price is likely to either retest the tip, retest half of the candle, or take out the candle completely to retest. So that is it. So you could see we have an engulfing and price came all the way down. Remember, this candle has not been retested yet, but still yet we cannot really ascertain when price is going to retest. So that is why one benefit of having this kind of strategy is because you don't force the market, you don't force trade. Understand? So when you know that price is still going to retest, and maybe daily has signified to you that, oh, there's a potential reversal, you can still take advantage of that trend, or of the reversal, or of the pullback. You can still take advantage of that as well, because knowing that there will still be a time whereby price is going to retest, and it will signal you from the 4 hours from the daily. So you have different cases whereby you can take advantage of the market. You have different scenarios, you have different opportunities whereby you can take advantage of the market. So in this case, you could see that price still came back to retest this candle. Let me extend this. So you can see that price still came back and retest this candle almost to the bottom of the candle. So why it is important that your SL is below or above the candle in whichever case, if it's a buy or it's a sell. If it's a sell, it will be below the candle that the market broke out from. Then if it's a buy, it will be above the candle that if it is for a buy setup, your SL will be below the bearish candle that market broke out from. And why if it is a bearish setup, it will be above the bullish candle that markets broke out from. So in this case, price still had to retest it before we have our major buys coming up, right? So that is how it works. Now you could see in this case too, same thing as well happened. Price still had to retest this candle to tell you that I'm done with this candle. I broke out from this candle. Now you could see that in this case now, if you pay attention to the candles, that I said, you need to pay attention to the candles and really know what the candle is saying before you can interpret what the candle is saying. Now, let's say, for example, you have this now. You can see that price tried to break this candle with a wick. Now, breaking a candle with a wick simply means that, it's attempting to go higher or attempting to go lower, depending on which case we have that break. So now you can see when price tries to break a candle with a wick and closes still within the zone of that candle, It's just simply giving you, pointing to you that I'm likely to start buying. I'm trying to break out from this candle. That's what it simply means. I'm trying to break out from this candle. And this candle as well still tried to break out again. And you see there was still a rejection and it's closing slightly above this candle. So for this case, we are not having a confirmed break of structure yet, a break of candle yet, a break of the candle yet. We are not having that yet. It has not been confirmed to us here that this is now a break until we now have this. So you see that there is no way price could retest when this has happened, because if you are saying this, if you are seeing this as your break of structure, as a break of candle, sorry, of the individual candle of this previous candle, you will see there is no way you would anticipate for price to retest, because it's closing exactly above or exactly at the zone of where this candle is. So there's no way you can say, oh, this is now price, this is now a break of structure and a break of candle of the previous candle, and price will not start retesting. But you see, after this happened, that is when price is now licensed to come and retest this candle, right? And you don't need to wait for price to man retest before you go in for a buy. You can still go to your daily, because you know that, oh, the retest is going to still happen, right? And the daily would signal to you that, oh, I'm changing, or I'm pulling back for the retest, or the 4 hours too will signal to you that I'm pulling back for the retest. Now, where you get to see your pullbacks is majorly from the 4 hours, or from the lower time frame. But for me, I prefer using the 4 hours as my least time frame to trade a pullback. I prefer using the 4 hours as my least time frame. In some cases, I can use the daily to have my confirmation that, oh, there's a pullback that is about happening, right? So this is how this works, and the weekly time frame is just my time frame I'm using to buttress this point, using the weekly to tell you how it works, right? Or to tell you how to get a full to get the long-term view of where the market is heading to. Now we can use a live trade. Thank God that this is recorded, and you could see that after we had a break of this candle, so we have a break of this candle. You could see that this candle couldn't break this candle, but we already have a break of this low with a wick, signifying, telling us that, point to us that price is likely to keep on declining, right? But you see, it's still closed within this candle. So in this case, we have two things we have to consider, right? Because now you see how this candle closed. It's closed with a strong rejection. Now, this is the main body of this candle. Now, in something like this, in a case like this, we can say price has already given us a high tendency that there will be a break of this low. Why? Because you could see this candle engulf the body of this candle. So this is already a sign, right? This is already a sign or a clue or a pointer telling that there is likely a possibility of price declining to the downside. Why? Because, like I said, that the body of the candle is the main tangible part of the candle, not the wick. Understand? But for you to say, okay, I want to get my clarity, I want to be sure, you can still decide to wait until you see a full body closure outside of the whole body of this candle, or the whole structure of this candle. Now, when you see this full body, simply telling that, oh, I'm done with this buy that has happened, I want to sell. So this pair has a high tendency of selling all the way down here, before we now have a rejection. Let me adjust this. So we have all the way down here before having a rejection. Now, first and foremost, this candle has already tapped into this candle. So it is likely for price not to react here, and it's still likely for price to still react here. It's in two ways. It's likely for price not to react here because now we can see that price engulfed this candle, and the retest to this candle has happened, and the price kept on buying. So you see that when you take out time to study this, you will see that this plays out in so many ways. Now we could see in this case, price has engulfed this candle, price engulfed not really engulf. Price broke out from this candle because you could see that this could not engulf. So when I'm talking about engulfing simply means that one candle itself was the candle that gave us that change of character, that signifies to us that there's a change of character. One candle engulfing the previous candle. But in this case now, this is not an engulfing candle. This is because we have this, we have this, we have this. But this is just simply telling that, oh, I'm done. I've broken out from this bullish candle, and you can see the retest did not happen in this case. The retest did not happen in this case until we now have this. Now, in this aspect, we could see that price did not engulf this candle. Price did not engulf this candle. That is why you need to really know what price is saying, what the candle is saying. You need to really understand before you can interpret what it's saying. Now, in this case now, you could see that if you just want to start buying when you see maybe after the closure of this candle, you just want to buy based on this candle showed us that it is a green candle. You are just guessing. That's just prediction, right? Because what this simply tells us is that price did not break out from this. Price did not break out from this, and because this is the low, this is the high. So price tried to buy, which is quite obvious, but you see that price could not break out from this candle. No, it did not engulf. So this is to tell you that, it is when the next weak candle now breaks out and closes. Now, not just to break out and also to close. It is when the next week closes above this candle. That is when you have your confirmation that, oh, there is now a breakout of this candle. And remember that we are not looking out for a bullish market. We are looking out for a pullback to these points to take our major sell, because we remember that price has already broken out from this, telling us that this is now a bearish market, and why we are going to look out for price to come and retest this point or the body of this candle. Mostly this candle. In some cases, mostly it can decide to go deeper to retest this. When in most cases, it should just be within this zone before start selling. So you see that price tried to pull back, but it failed, and the next candle was still a red candle. See a red candle to counter this, and you see price still tried to buy again, but could not even engulf this candle. Then we now have this candle had to engulf this candle, telling you that I'm still declining, telling you that I'm still selling. This is what it simply means. So you could see that the candles alone will tell you where the market is heading to. Now, if, for example, you are within this zone, you can interpret what the weekly is saying, right? Now, it doesn't mean that you wouldn't have seen any trades here to take, because if you go to the daily, the daily would have given you maybe an engulfing candle from a daily to tell you that it is buying, and you can take advantage of that. Understand? And you know that your TP is the high of this candle. The TP is the high of the candle until price breaks out, before you can now say, okay, there's not a breakout. Then you can look up for a retest and go in for another buy, right? So you see, the candle will always tell you where the market is heading to. The closure of the candle will tell you where the market is heading to. Now you can see in this case, we see that price engulfed this bullish candle, and for this candle to keep on selling, the retest needed to be done. So you see that the retest is very, very important. It is not just all about the breakout of the candle. The retesting of the candle is the major aspect that we are looking onto, right? So I think it is time for me to start the live class. So let me move to the live class and end this recording.